8%. Warren's arbitrage performance not only beat his regular portfolio's performance, it also stomped the average annualized performance of every investment operation in America by a mile. No one, be it individual or firm, even came close, and people wonder how he made so many people millionaires. With such incredible returns, how could he not? Martin and Puthan Parakel's study also brought to light the powerful influence that Warren's arbitrage operations had on Berkshire's stock portfolio's entire performance. If we cut out Warren's 59 arbitrage investments for that period, we would find that the average annualized return for Berkshire's stock portfolio drops from 39.38% to 26.96%. It was Warren's arbitrage investments that took a great investor and turned him into a worldwide phenomenon. In 1987, Forbes magazine noted that Warren's arbitrage activities earned an amazing 90% that year, while the S&P 500 delivered a miserable 5%. Arbitrage is Warren's secret for producing great results when the rest of the stock market is having a down year. With Warren's incredible arbitrage performance in mind, and the knowledge that the average investor now has access to institutional brokerage rates, we thought it was high time that we took a serious look at the arbitrage and special situation investment strategies and techniques that produce Warren's mind-numbing results. Warren Buffett and the Art of Stock Arbitrage is the first ever book to explore in detail Warren's world of stock arbitrage and other special situations, such as liquidations, spin-offs, and reorganizations. Together, we explore how he finds the deals, evaluates them, and makes sure that they are winners. We go into the mathematical equations and intellectual formulas that he uses to determine the projected rate of return, to evaluate risk, and to determine the probability of the deal being a success. In Warren's world, as you will discover, certainty of the deal being completed is everything. We will explain how the high probability of the event happening creates the rare situation in which Warren is willing to use leverage to help boost his performance in these investments to unheard of numbers. So, without further ado, let's begin our very profitable journey into the world of Warren Buffett and the Art of Stock Arbitrage. Mary Buffett and David Clark. Chapter 1. Overview of Warren's very profitable world of stock arbitrage and special investment situations. The world of arbitrage and special situations is enormous. It can be found anywhere in the world where commodities, currencies, derivatives, stocks, and bonds are being bought and sold. It is the great equalizer of prices, the reason that gold trades at virtually the same price all over the world, and it is the reason that currency exchange rates stay uniform no matter where our plane lands. A class of investors called arbitrageurs, who make their living practicing the art of arbitrage, are responsible for this. The classic explanation and example of arbitrage is the London and Paris gold markets, which are both open at the same time during the day. On any given day, if you check the price of gold, you will find that it trades virtually at the same price in both markets, and the reason for this is the arbitrageurs. If gold is trading at $1,200 an ounce on the London market and suddenly spikes up to $1,205 on the Paris market, arbitrageurs will step into the market and buy gold in London for $1,200 an ounce and at the same time sell it in Paris for $1,205 an ounce, locking in as profit the $5 price spread. And arbitrageurs will keep buying and selling until they have either driven the price of gold up in London or the price down in Paris, to the point that the price spread is gone between the two markets and gold is once again trading at the same price.